Welcome to Prime Suspects, alongside Adam Bjorn and Prime Sports co-founder Joe Brennan Jr. I'm your host, Matt Landis. Adam, let's kick this off as we always do. NFL Week 17 in the books. How are the results across Prime Sports and BetCris?
So we had 3 out of 4 good states. After taking down our friend in Ohio a week ago, he came back with a vengeance. So Ohio is not a good state. But no, the other 3 states were good. Yesterday's results were pretty much balanced, nothing major. But again, all in all, had a strong lead early in the week, kept it over the weekend, and, fighting to see another one.
All right, well, there's more on deck with the NFL. We've also got more on deck with college football's bowl season. Anything noteworthy to report from this past week's games?
Lots of volume and lots of live volume. I did happen to look at it, and I think it was a bit over 60% of the action came live. So we're definitely seeing that transition from, just a couple of years ago where it was still 60, 70% pre-game, but now it's coming in on the live. And a lot of good games back and forth and whatnot. So keep the numbers up as much as possible, take the bets and move the lines. Just keep doing what we're doing. But the volume has really been, haven't checked it against last year, but I think it's significantly up this bowl season.
Well, when it comes to the topic of keeping on doing what you're doing, I also wanted to check in with you, Adam, on news that started to make the rounds on Twitter about the future of Prime Sports. Wondering what you can share in terms of an update on the status and how things might play out over the next few weeks from your point of view.
Not a wrinkle per se, but a part of the process come out last week. So you had everyone scurrying around like, what the hell just happened? What they have to do is put the assets up on public auction in a bankruptcy process. And that's got pushed out last week. And a number of people that were involved in different conversations that were having new market accesses, new contracts with data and all that kind of stuff, all hit me within a 24-hour range. And then I got this call as well. Part of the process, I don't suspect anyone's coming in to bid for $8 to $10 million for the assets of Prime Sports. Does not mean that, it's not worth that or it's worth that or anything else. The idea is it has to go through this public process. Us as the leading sort of financier or lender is in a position to take this down when it goes through the process. Again, all new stuff that I'm learning as I go along. When I did get the first call, it was like, what the hell, send me the link. And then as I was going through the conversation, it was like, no, hang on a second. This was part of it. I remember this conversation, and then followed it up to check exactly where it's at. Everything's on track. Everything's been going a hell of a lot better than kind of expected walking into it. Business as usual. Players are getting paid per usual. Futures, while they're not being offered right now in the 3 prime states, that's purely just a courtesy to regulators, to market accessors and stuff like that to go through the process that we're dealing with. But I imagine all this comes out and is done to late January. And then there's still some other transitions once we get our hands on the reins of running out the gate / Prime Sports. We have a few things coming along the pipeline that I think will shake things up a little bit. Time will tell. We'll see. There's been many that have failed it before us in being able to do this successfully. I'm not here to say that it's easy or we're going to be any more successful than anyone else. We're just going to keep chipping away at it until we sort of try and work out, how do you do this? How do you make the most of it with the very expensive business aspect of it that the states are making for it? Yes, someone asked this week, wouldn't we be better off going into the prediction world? I don't know. I've been in the exchange world on and off over the last 20, 25 years, and I've said from day one, I don't see it as a profitable pathway for what we're ultimately doing. I like to see who's coming in the other side, who's placing the bets, so we can use that information as best as possible. So yeah, everything's on track. We're just closing out the year, so lawyers and all those kind of things gone dormant. Regulators per se will come out next week, getting this thing over the line.
And with that, we will move right along into our second segment and taking a look at the year in review, if you will, synthesizing some of our dominant topics and themes from the show in 2025. Jump ball to the two of you to get this started. 2025 was a year that legal American sports betting got adjacent competition in the form of prediction markets, which was unquestionably the dominant theme for the year. What's your sum total reflection on the arrival of this product to the American market, and how do you size up its impact on the industry so far?
All right, well, I'll take the first jump ball, and I'll say it's obvious. Anybody, and it's not limited to the sports betting industry or the gaming industry in any way, or the technology industry. It's just, As somebody who's been around long enough to once have had his bookmark search engine be Alta Vista, who has an AOL email address, who's had accounts on Friendster and MySpace, there's an awful lot of early empires that thought that they were in a dominant position that would be unassailable. And their founders and investors and talking heads in media talked about that, talk like that every bit as much, only to have them now all pushing up the daisies. As a matter of fact, under my desk right now, I have a box of dust that's from the AOL headquarters from down the road that I used to work at, AOL World Headquarters. It is now a pile of rubble just to remind me that all empires fall. So this time last year, it was kind of like, ooh, look at that. Kalshi won a court case so they could take presidential bets on the presidential race, okay? How that all of a sudden got extrapolated into like they're in the sports betting business, and anybody who wants to argue that they're in anything other than the sports betting business, you will not be tolerated here. But just look at how that's turned. Prior to that, what were we talking about for months? It was sweeps. And what's interesting is everybody just crowds into these pools. And then everybody just spouts off and proselytizes, says how, unassailable their market position is and how dominant they are and the amount of money that's raised and attention is paid to it. And then just look how quickly it takes to just be able to eclipse the prior dominant brands that we were talking about. It happened in a relative moment. So a year from now, what does the market look like? It's at least a 50-50 chance that we're talking about something else. All you have to do is look at history, look at industry, look at technology, and to bet against it being anything otherwise would be foolish.
And Adam, want to discuss 2025 also being a year where it often came into focus whether bets counted and who gets to bet, recalling New Jersey's proxy betting law, Massachusetts reviewing betting limits, and across the board, voided bets and the inevitable consumer pushback that came with a lot of that. How would you summarize the year from the player side of the counter? And to be direct, are bettors in a better or worse position at the end of the year than they were at the start?
Bettors are in a hell of a lot better position than they were at the beginning of the year. Options. I mean, there's just way more options now. You have the Kelchis, you have the poly markets. Yeah, you had the sweeps. You had a whole heap of inefficient market makers as well. So I think the feedback from the top end of the player pool is they had a heck of a year. There were so many opportunities, so much money out there for them to just scoop up that wasn't normally available. Yes, they've been limited and they're having the struggles with the regulated sports books, but they're still finding ways to get around this at times as well. So for bettors, the more options they have, the better opportunities it brings them. And I think this year, especially with prediction markets on the back end of the year, in particular, have really made out well this year.
And Joe, we'll come back to you for our next question here. Thinking about the tax and regulation squeeze throughout much of 2025, bringing a steady drumbeat of state tax hikes and new restrictions, and the likely push of bettors and operators toward offshore and alternative products. Examples including Illinois, New Jersey, Ohio, and even at the municipal level with Chicago. While states chased revenue and optics throughout much of 2025, the market often seemed to respond by circumventing the rules. So when we look back on 2025, do you think the tax squeeze will be remembered as more of an existential threat to sports books than alternative products like prediction markets?
What you're seeing again is it's not limited to gaming or sports betting or anything like that. It's that government and the markets, they just keep going until they bump into something. It's like watching somebody learn how to parallel park their car in the city. It's like parking by braille. They just keep backing up until they crash into something, then they move it forward until they crash into something. And eventually, after crashing both ends enough times, maybe they come to some sort of equilibrium that would resemble a legal parking job. And that's what we're watching here right now. Government has really overplayed their hand, okay? And the manner in which they are doing it is, and I've said it already here, so cover your ears, lawmakers, is disgraceful. It's like, there's a cookie jar, let's read it. And as soon as a politician says such and such industry has to pay their fair share, it's a pretty good red flag that they're about to rob you, okay? They get to decide the fair share is right now. I don't know how, whom are so dependent upon the revenue from gaming right now. So many states are dependent upon gambling revenue that they could be this egregious and upset the apple cart, because these are businesses, okay? This is not like saying we're going to take another 10% of the tobacco crop and it just grows out of the ground. this money has to be generated. So and the fact that these are all gross gaming revenue taxes. So before we can claim a dollar in expense, the states are taking it right off the top. And they're doing this. It's amazing how absolutely tone deaf they are. As Adam pointed out, there's never been more options for players right now in any of these places for where they could bet their dollar. Okay. It's starting to spill over. The players will start to feel the pinch from these prices, either in worse odds or in surcharges like you're going to have levied in Illinois. So for the Chicago City Council to double down and layer in this 10.25% GGR tax when they don't even have a license regime in place in order to be able to facilitate this. This is how much of a money grab it is. They're all ready to take the money as of January 1st, but they don't have any licensing mechanism, nothing in place. It's just a theft. I'm probably going to get my son in trouble because he's now a Chicago resident. Who knows what's going to happen in his house? But you're just going to see this. The markets will crash one way, government will crash the other way. And you just hope at some point in the future, we come to some sort of sustainable equilibrium, because we're not there yet, either for government or for the industry, for the marketplace.
Well, from looking back at 2025 to looking ahead to 2026, a few topics here. Consider each of these jump balls as well, so feel free to weigh in as you see fit. First up, changes to gambling loss deductions will come into effect on January 1st. With that about to become reality, what do you expect to see happen? And how much could it drive sports bettors to prediction markets given the different tax treatment on winnings?
Well, I think from the players' view, while there was kind of chaos and whatnot at the beginning when this was first announced, seems like everyone's a lot calmer now and has found solutions on, how this works. Arbitrages, all they're saying is they're just reporting a daily figure of what their ups and downs are, which are normally up. So they're just dealing with that. Other group syndicates, the prediction markets, it's not gambling. So it's not treated by the gambling losses. It's just trading stocks per se. So I think there'll be some of that. And then, there's a lot of them that do report their offshore or unregulated wages and betting because that's just how they are. Maybe that gets reported a little less. So those numbers match up a little bit more. It's a good thing about advantage players is they'll find their way to make it an advantage even when it's a disadvantage per se. I think they've been working on this for a long time. They've got it set up. A lot of them, their expenses will go up. There'll be all kinds of things that they do. And usually it's only becomes a question when someone gets audited or something of that nature to make sure they have all their ducks in a row. On this one, a lot of noise in the beginning. I think a lot of it's calmed down and everybody's kind of worked out how do they tackle this going forward. I'm sure there's lots of people that will get caught in this web that haven't looked at it from this perspective or don't even think that it's going to hit them, and they may get caught in it, some bigger bettors. But all in all, we'll drive some to the prediction markets, but it's just the way people work out what to do with the rules of the game.
Yeah, when you maybe see change on this, when you get to like the edge cases where it's square players who maybe had a break-even year or maybe even a slightly up year, and then the next thing you know, they're getting gouged for some unrealistic tax bill. Now they've had a losing year. All right. So it has to hit, I think, John Q. Public before any real change has. Because again, the reason why this tax increase happened in the first place is because of that. And we've talked about this before, this attitude, this really bipolar attitude that government has about gambling, which is they are happy to take the tax money, but they still think it's a dirty business. And the people who engage in it, whether as a business or the participants, are morally flawed and they kind of deserve to be punished. And this is a punitive tax regime. And again, until it starts hitting people, like hitting the Spankies or the Rufuses or anybody of that of the world, there's not going to be a whole lot of sympathy. But when it starts hitting, the guy on the street, the family guy who just had like a good run or something like that, that's when you're going to see movement on tax policy.
All right, well, I hope you guys enjoyed that topic and the breather from prediction markets, because we're coming right back to that dominant theme of the year and likely a big theme to watch for in 2026. So with the largest regulated sports books now squarely in the prediction market business, what do you guys think the sports betting operator of the future looks like? And how much of the real competition for sportsbooks in 2026 will be other sportsbooks as opposed to non-sportsbook betting products?
For me, I want to see one thing. Do the regulators that have been, yelling from the rooftops that they're going to come after these books that get into predictions actually have the backbone to stop them, because we're in 2 sports only states. There's 2 of the loudest that have been coming out for this, Arizona and Ohio. And I would love to see DraftKings and FanDuel be no longer in those states. Yeah, curious if, they back up what they've been saying for a solid 6-8 months on this. What does the future look like? I mean, for me, I've always said just work out a way to make it a hybrid. Federal take the straight bets and whatnot, keep those things out of the prediction markets, carnival games to the states and all that. I'm sure there's ways that they can work it out. It's just unfortunate that they probably will never actually get together and work it out, because they're all just fighting over the same thing when it's not the same thing at the end of the day.
Yeah, I think you're going to see a big push in DC to get enabling legislation out of Congress. If there's one thing that both parties can agree on, is that they really like the money coming from the financial services industry and from the tech bros and from the crypto bros and everybody else who's invested in prediction markets up to their elbows. So, I mean, court results have been less positive for the prediction market. So the best way to remedy that is go and get an act of Congress to allow them to do what they want to do. So expect to see a pretty healthy lobbying effort wind up and get going here in Washington. But yeah, in the end, it's like gaming will be, a gaming shop will be Costco. A little bit of this here, a little bit of that there. Try the free, Vienna sausages in the food aisle, that kind of thing. Yeah, and it'll just be everything under the sun. The people who are the losers in this one are the states and the tribes who use their dominant position in order to, and it was legitimate. I think particularly of California tribes, they created that marketplace and they are very politically powerful. But prediction market thing is very dangerous to them because it just goes right over the top of their political block and it completely bypasses them. At the same time, California's been slow to embrace everything when it comes to digital gaming. I always like to talk about how when we got started on lobbying for sports betting and then also online gaming in New Jersey, it was 1 year after people started lobbying in California for legal online poker. And to this day, you still don't have legal online poker. And that is because of the opposition of the tribes. The tribes have been very stalwart, making sure that it gets done on their terms. But can you believe that the state, the one place in the world, if anything, that, most exemplifies technology and technological advancements, and you can't do legal digital gaming in that state today. And it's because they've been sitting on it. I understand why they do it. I hope that they come up with a forward solution here quickly, but I think California could wind up being an example of there's somebody bigger and they're just going to take your top off.
And Joe, revisiting a theme you alluded to earlier on in the conversation, in the same way most people didn't foresee the rise of prediction markets at the start of this year, what do you speculate might be something people aren't necessarily expecting heading into 2026 that'll take rise during the year?
All right, I feel like I have to confess up front, I might be conflicted in this answer because I am working on a project, part of which is going to start rolling out in early 2026. I think I said earlier in the call, it's like somebody makes a pool and everybody rushes into that pool. First it was like online sportsbook, and then it was sweeps, and then now it's prediction markets, and everybody just crowds into the pool. And there's not a whole lot of, I think that there's other pools in this that can be created. And that's where I'm looking to go. And I think others should start to look at it. Like, I just think of everybody right now wants to become a predictions marketplace. Matt, you're always quick with the, in-game Google searches and everything like that. Can somebody tell me how many new DCM certifications the CFTC has made since they authorized Kalshi and Crypto.com to be able to do this? Because, like Polymarket, FanDuel, DraftKings, everything, they're all entering the market having either acquired or partnered with somebody who had an existing certification. But when we look at new entrants, new applicants, they're at a standstill. So you have a lot of people crowding into this pool that there only seem to be a very few people who are actually allowed in that pool. But everybody's going to stand around looking for their opportunity to jump in this pool. What the people in sweeps are going to do, I guess they're all like, Novig, they're going to become a prediction marketplace or declare their intentions to become a predictions marketplace. Great. I hope they all do. I hope everybody spends all their time looking at these crowded pools and how they can be just another participant in it, and, gives the opportunity for other people to go and look at like what's a new pool that can be created. I don't often blow my own horn. I really don't, even though I'm a big mouth, but I'm going to do it this time. I've been right big time on two things so far in this industry, between legalization and then DFS plus. And my plan is to be right big time at least one more time in this industry with the way we're going to go this year.
And Joe, as you wrapped up those remarks, I gave my best attempt at some real-time research here. So if Google Gemini is correct, since the time of Kalshi and Crypto.com receiving their initial CFTC DCM authorizations, the CFTC has issued at least 7 new DCM certifications to other entities. Those include IMX Health, ForecastX, Railbird, QCX, Electron Exchange, Aristotle Exchange, and Gemini Titan. If I were to set the over-under at 6.5 when you floated that question, how does this check out in your book?
So we know Railbird is in there. They were acquired by DraftKings. Who else in there is doing the current prediction marketplace route? I don't think any of the other ones are right now. So, okay, we'll see what happens. Like Rizbix is on the docket. I think they may be approved by March. Our good friend Jeff Ifra is the founder behind that one. We'll see how many of these other folks who have declared their intentions to enter the prediction marketplace, if they're successful in entering. But I don't think it's a big doorway. I think it's a keyhole. I think it might be intentional from certain people in and around the administration to keep it that way. But I guess we'll see in 2026.
Adam, any bold predictions on your end when it comes to what we may want to anticipate for 2026?
No, not really, because there's no new innovation, or it's just old ideas coming to the US market, much the same of what it's been for a very long time. It's just starting to expand and get pushed over these parts. So, and like a lot of stuff in the US, when it arrives, it feels like it's the first time it's happening the way they talk about it. But no, I imagine the one thing that I will say about 2026, and recently someone told me that FanDuel forecasted that their soccer will be like a 10% or 15% increase of volume in 2026. I've happened to see a couple of World Cups and seen, unregulated offshore numbers over the past 11 or 12 years. It's going to be big, and the 10, 15%, I don't even think they really understand what's coming their way if that's what they're predicting. So that's what we're building towards. I think the World Cup numbers, and especially the way that the regulators, legislators, or whoever it is, where you've got to have social security numbers and all those kind of things in a lot of these states. Prediction market sweeps, they're really going to be able to take a huge opportunity at these tourists and the traveling people to be able to capture some of this volume. So I think that'll be the highlight of 2026, is just the enormity of the numbers that is going to get written on this event. And again, the states, I think, are going to have failed by actually being able to capture a lot of that revenue or handle as well. So I don't know, is there a time when the states kind of look at what they're doing and what they're putting together and try and make it easier to get more tax revenue? It doesn't seem so. So I guess we'll see at the other side how this actually comes out.
Yeah, regarding World Cup, there's two things I'm interested to see how they may affect that opportunity that Adam is talking about. It should be a no-brainer to try and grease the rails for visitors to the U.S., Canada, and Mexico. But let's focus on the U.S. here right now, since I'm neither Canadian nor Mexican. And, to grease the rails and to make sure that they capture the biggest opportunity with, our brands, our regulated brands. But right now, I do wonder if the outside world, which is the negative effect that you've had with tourism into the United States, things are definitely down right now because of the administration. I'm not going to get political, so I'm an independent. But there's been a net effect that tourism to the United States is down. And then you couple that with the ticket prices are utterly ridiculous. Orders are way down for advanced ticket sales to games. And that's even after the matchups, the early matchups have been announced. It's unreal how they're pricing this out of everybody's hands. So I wonder who's going to be going to these games. And if you can't realistically go to a few games, why are you going to spend the money to come to the United States? And thus, why are you even going to need to be able to register and play at a regulated U.S. sports book? So I am really interested to see how that all is going to play itself out.
And from a look ahead to 2026 to a more standard look ahead to close out this week's episode, Adam, what's the most noteworthy action you're seeing so far since posting NFL Week 18 openers, which have a unique way of going haywire from the outset?
Yeah, so it's been fairly quiet. A couple I did know was the Jets, Bills, about 53% of the money on the Bills, but 100% of the master money on the Jets went from 12.5 down to 8.5. You can just sort of look at the games and the limits. The Ravens, Steelers, Seahawks, 49ers, Panthers, Buccaneers, the games that mean something, double, triple the limits of every other game. The rest of them, minimum volume, Patriots getting a bit against the Dolphins, Bengals against the Browns, Jaguars against the Titans. Apart from the Jets, it's really the favorites that seem to be getting the money running their way, whether it's just a fact that there is just certain teams that everyone's expecting to not be there or not be competitive. Going back to Joe's thing last week of the players have things to play for, but a lot of them as well, once they either hit or can't hit those marks, drop their head a little bit, and not everyone's playing for something of that nature. So it's kind of interesting to see where the volume's coming in. It's not as big as what it's been the last few weeks. Again, a lot of people, a lot of injuries, and then a lot of players, quarterbacks even, of these teams that are going to be resting. And that's kind of tough for the traders and the odds makers when they come up with these things of who is actually playing, who's not going to be. Yes, we're expecting ones that not necessarily getting the top team with the bye, but ones that are going to have to play guaranteed the following week, rest their players after long seasons. So a lot of this time, it's just throw up a number, keep the limits moderate until you start seeing some good two-way action from people that are getting the information that you need to be able to manage these games better. But I will add, we rarely have this on a Monday, but tonight we definitely have a data play. We've got 72% of the money on the Rams, yet 94% of the master money is on the Falcons. So again, those things have been doing very, very well in recent times. So Monday nights, there hasn't been a lot of them, especially this time of day, but the volume's been coming in hard on this one. And yeah, we'll be on the Falcons tonight.
What time is this podcast going to be released ahead of its Monday night game? Do I have time to go and get that money down on the market? So the question I got for Adam is, and I'm going to, again, indulge my beloved Philadelphia Eagles on this one. So, the Eagles, they're unlikely to be playing for anything. They're going to be playing a dog shit team in the Washington Commanders. Sorry to all my next door neighbors. But so right now, Prime's currently at 8. I don't know what we opened at, but when you're factoring this into like the number that you hung on it, when you open the market, how much of it can you bake into, like price into it, the assumption that Jalen Hurts, Saquon Barkley, others are not going to be playing, even though it's not official yet? How much do you hold off of that? And then when it does become official, let's say Wednesday, Thursday, that Tanner McKee is going to be your QB1 and Jalen Hurts is going to be, QB2 with a clipboard, how much do you adjust for that in real time, based on the player's value?
Yeah, well, the one thing that you traders should be doing in these situations is not giving a shit what number they opened at, because it's really becomes irrelevant once you get more information, especially substantial information like who's going to be QB, is Barkley going to be playing. The way it's priced right now, it seems like they've got them in the game. It did open 9. There was some that bought it up to 10.5 and 10, and that's sort of what brought it down to 8. Then the only money on the Eagles so far are teasers, which has brought it down to 2.5 as well. But yeah, this is where you'll have all kind of wacky middles and horrible positions come Sunday's games, because the traders, sure, put up the number, keep the limits low going into getting more substantial information, but don't fear jumping 3, 4, 5 points. If there's, you have both Jalen and Barkley come out, just like forget what you did previously, put up a new number, like this is a new game kind of thing. And that's ultimately what they have autonomy to do in those situations. And also, this is the advantage of being an all-welcoming sports book. You know which players are coming in, and when they start coming in a little harder than normal, saying, okay, something's going on here, take it off the board, go check the information, see what's out there, and then reopen it and start again kind of thing. Because week 18 of NFL season is no fun as a bookmaker.
All right. On that note, I will close by paraphrasing the late, great David Malinsky, whose 65th birthday would have been tomorrow. by mentioning that if a regular slate can feel like looking through a microscope, the Week 18 slate can feel like looking through a kaleidoscope. And as you just shared, Adam, that applies to both sides of the counter. So as we all navigate the NFL Week 18 ambiguity together, we'll go ahead and call it a wrap for Prime Suspects in 2025. To the audience, thanks as always for tuning in. Have a safe and happy new year, and we'll catch you next week with our first episode of 2026. Thanks for listening to this week's episode of Prime Suspects. Register for Prime Sports at primesports.com and download the Prime Sports app. You can follow us on Twitter at PrimeSuspects_, at Joe Brennan Jr., and at Adam Bjorn 2. You must be 21 or over to play on Prime Sports. Always bet responsibly and within your limits. If you or someone you know has a gambling problem, call 1-800-GAMBLER.